Right, now we're talking about a Chinese company, which is fantastic. I love doing these. This one's called Kweichow Moutai. I didn't even need to break my teeth saying that. It comes from a part of Western China, well, the company that manufactures it, from a town called Moutai, but it basically dominates the Chinese liquor market insofar as they manufacture a product called Moutai, which is made from sorghum or rice wine. It's got a very high alcohol percentage, and you can get it in all sorts of different layers of quantity or quality. Market capitalization, they were talking about it in the news globally because it's gone higher than Diageo, which is the next company we'll talk about, 71.5 billion US dollars. Or if you want to talk about it in its Shanghai listing, that's about 484 billion yuan. Price to earnings ratio 29.3, dividend yield 1.58%. How does this one look to you?
This is
unfortunately, we don't have any of the products here.
Yeah. Well, or maybe fortunately.
I tried.
Yes. Maybe fortunately. I suspect it probably tastes a bit like sake, the Japanese rice wine, something like that. And as you say, it comes in very different variants. Look, I think with China changing the nature of its economy, going to be more of a consumer-based economy.
Yeah.
I think a company like this, very, very nationalistic. The Chinese love this type of thing. And as we were saying off air earlier, used in diplomatic circles.
Yes.
And it's some of these things go for like $500-600 US dollars a bottle.
What they were explaining is that it's traditionally the sort of elite product which gets used or opened or drunk or when there's a celebration going on or if you're doing some sort of important gifting. But with Xi Jinping cracking down on that a little bit, they lowered prices and they're now trying to kind of get it across the board. But you're absolutely right. There's some premium products that could be matured for as long as 80 years.
Yeah. So, as I say, I've never tried it. And to be honest, I don't think I really ever wanted to try it.
Apparently there are some versions of it which kind of come out of the bottom of the distillery and which get sold to working people, which has a very high alcohol percentage and is, Westerners are warned, don't even think about drinking that because you will literally fall on your face on the road.
Yes.
You'll have to retire hurt.
Yes.
But it is so dominant in the Chinese market, 95% of its sales from China.
What is really fascinating, Paul, is the Chinese have this idea that anything that is local is not necessarily that good, and anything that's imported and has got, it's an international brand is good. And yet, this one, I think, there's some very, very clever marketing going on here to elevate it to status that is on a par with the international brands.
Just one final point about liquidity. So that's what it looks like if you look at the Shanghai market. So that's why it's obviously gone above Diageo's because it's been moving higher in recent times, looking good. But there's a liquidity issue. I mean, the majority of the shares belong to the Guizhou Provincial People's Government, which is like the province. And it's a structure where only a small portion of the company's tradable liquid capital structure is available on the Shanghai market. So it's a bit distorted. I mean, like the drink, you probably find this is not a stock for Westerners.
Yeah. No, I think so. No, this is purely a Chinese play, absolutely. And it's going to remain so, I think. Yeah.
Okay, so for ordinary investors, probably not hot.
Can't see it. No.
Okay, well, let's pass on that one.